Welcome. This briefing explains the essential procedures for establishing robust payroll management based entirely on the analysis within the source document, Established Procedures for Payroll Management.
The source material is structured into 4 key areas. We will proceed in order, covering the procedures for securing payroll information, the process for substantiating allowance claims, the methods for safeguarding financial resources, and finally, the requirements for meeting statutory obligations.
Let us begin with the first key area, ensuring the confidentiality and security of payroll information.
In this first section, we will detail the essential procedures for securing payroll information, focusing specifically on how to maintain confidentiality and prevent unauthorized access, as outlined in the source document.
The source document specifies 5 foundational security measures. The first line of defense consists of strong passwords and regular software updates. This is followed by role-based access control to ensure staff only view necessary data, data encryption, to render information unreadable if intercepted, and finally, secure storage protocols for both physical and digital records.
To illustrate role-based access control, the source provides this practical example from a system like Xero. Note that a payroll admin has full permissions, whereas an employee is restricted to their own details. This demonstrates the principle of need-to-know access, which the material identifies as a cornerstone of data security.
The source document also highlights common security threats alongside their corresponding mitigation strategies. For phishing attacks, staff must be trained to verify senders. For insider threats, it is critical to implement strict access controls. For malware, updated antivirus software is essential. And to address the risk of weak passwords, the source advises enforcing strong, complex password policies.
A critical security measure detailed in the source is data encryption. This is defined as the process of converting information into a code to prevent unauthorized access. Crucially, this protection applies both when data is being transmitted, referred to as in transit, and when it is stored on a server, which is known as at rest. Having covered data security, we now turn to our second section, the procedures for substantiating allowance claims to ensure they are both legitimate and compliant. According to the source material, allowances are defined as extra payments for specific work-related costs. These include a range of categories, such as travel, car, uniform, tools, meals, or a living away from home allowance. The source specifies a clear 4-step process for managing these claims. Step 1 is the employee's submission, which must include all necessary documentation. Step 2 is a review by HR or a designated officer to check for compliance. Step 3 is formal approval by a manager. The final step is processing the approved claim for payment.
We will now address the safeguarding of financial resources. This third section, based on the source, details the legislative and organizational requirements for protecting company assets from both misuse and fraud.
The source document identifies several key pieces of Australian legislation as foundational to this area. Acts such as the Fair Work Act, the Privacy Act, and the Superannuation Guarantee Act create the legal framework that governs how financial resources in payroll must be handled correctly and securely.
In the event of non-compliance, the source material mandates a structured 4-step corrective process. First, one must identify the problem's nature and cause. Second, correct the error promptly. Third, document the issue and all actions taken. And fourth, implement new measures to prevent a recurrence.
This brings us to our final section, which details how to meet statutory obligations. Here, we focus on the legal requirements for both reporting and record-keeping. This summary table, taken from the source material, highlights key legal requirements. Note the consistent theme for record-keeping. Under both the Fair Work Act and the Superannuation Guarantee, records must be retained for 7 years. State payroll tax retention periods vary, but are still between 5 and 7 years, underscoring the importance of long-term data management.
To underscore that point from the source document, the mandatory retention period for payroll records as specified by multiple pieces of legislation is 7 years.
A central component of modern compliance is single-touch payroll, or STP. The source defines this as an Australian government initiative requiring employers to report employees' tax and superannuation information directly to the Australian Taxation Office each time they process payroll.
To synthesize these concepts, the source provides a final checklist of best practices. This includes staying current with legislative updates,
utilizing STP-enabled software for real-time reporting, conducting regular internal audits, ensuring systems are secure, and investing in ongoing training for all payroll staff.
We have now covered the foundational elements from the source document. The critical takeaway is that effective payroll management demands continuous review and diligence. This leaves us with one final crucial question for consideration. Are your organization's payroll procedures sufficiently robust to ensure full compliance and security?